So the big tax question is this: how do wealthy people keep their money working for them when selling their business, real estate, or other highly appreciated assets without paying hundreds of thousands to millions of dollars in tax? What if we, as business and real estate owners who have poured blood, sweat, and tears to growing our wealth, and who didn't hire expensive tax attorneys and CPAs to map out an exit strategy, knew their secrets? Instead of recreating the wheel, why can't we just model the way they deferred 30 to 50% in tax, paid off debt, funded their next business dream, and most importantly, leave a financial legacy to give to the causes we believe in most? What if their secrets weren't complicated at all, and you just need a guide who is a few steps ahead of you? That is the question, and this podcast will give you the answers. My name is Brett Swarts, and welcome to Capital Gains Tax Solutions.
Hello, everybody, and welcome to another episode of the Build to Billions podcast, where we guide successful entrepreneurs on their journey from millions to billions. We believe the key to scaling and compounding your wealth and life starts every single day with a mindset and practice of stewardship over ownership and applying billionaire biblical principles. Our ultimate goals have to be scale and compound your wealth and life so you can give more all of it away to help MVPs. My name is Brett Swarts, and each episode we're joined by the world's top entrepreneurs, millionaires, and billionaires, and they share their secrets with us so we can all compound and make a bigger impact. I'm excited about our next guest. She's out of the Boulder area in Colorado, and she is on a mission to help people with reverse mortgages. And she carefully guides clients through the entire HECM reverse loan process, and so they're confident about their options available for the next 30 years. Please welcome to the show with me, Laura Phillips. Laura, how are we doing?
Pretty good. How are you guys doing? Happy New Year.
Yeah, doing great. Yeah, Happy New Year to you. And for our listeners to get to know you for the first time, would you give us just a little bit more about your story and your current focus?
Well, gosh, I have been in the mortgage business for over 30 plus years, and discovered about 15 years ago that seniors were not well addressed. Reverse mortgages were out, very unknown, but kind of just watched them on the periphery. About 10 years ago, I decided to jump right in, full feet first, into the reverse mortgage market. I am strictly offering reverse mortgages, and I feel like it's a really misunderstood product. So I'm kind of a one-woman bandwagon to let people know it's not a bad product.
Okay, great. What's the number one secret to making reverse mortgages a winner for someone who might be listening?
Number one secret is to be open and listen. Find out all you can about it. My biggest thing is to say that it's timing. It's your timing, and I suspect that almost every senior will consider and look at a reverse mortgage in the course of their lifetime.
Okay, so be open and willing to hear what it is. What's the number two secret to a reverse mortgage?
The bank doesn't own your home. Everybody thinks your bank owns your home. It's just
Right.
a mortgage. It's just like any other mortgage you've had. It doesn't own your home. It is a lien against your property.
Mm-hmm. Okay, so what if people don't have that understanding or that mindset? What changes once they do know that they own the home and the bank doesn't own their home?
I think they feel more relaxed. I think their biggest fear is the bank can come in and take it away at any point. There are two ways you can lose your house in a foreclosure with a reverse mortgage, and one of them is to no longer live in it. So, if you don't occupy your home for a certain amount of time in the course of the year, then it's not considered your primary residence. The other one is if you don't pay your property taxes. If your property taxes go into arrears or are behind, then eventually the mortgage company is going to come in and pay those property taxes and take the home away.
Okay, so number one is listen and be open-minded to the solution of a reverse mortgage. Number two is knowing that you own the home, and it doesn't have to be such a maybe a scary thing to think it's going to be taken from you, right? That's what I'm hearing. And what's the next secret and the next part of the thing that helps people to get really clear on the secrets to a reverse mortgage?
Well, came with a lot of negative thoughts out there. Reverse mortgages have been out for about 30 plus years. There's a lot of negativity around it. So to not feel shame about maybe you didn't save enough for your retirement or whatever feelings you have within your own personal self about having to go get one because of those early thoughts and comments about reverse mortgages. So there's no shame in getting one. People who have millions of dollars use it as a financial asset to make funds last longer and make their money work for them. People who haven't saved enough use it to be able to fund their 30 years. So it really is your personal needs and not to feel bad about it.
Okay, that makes sense. Yeah. So just knowing that it's just another financial tool and not to feel bad about it or feeling insecure about it, and or maybe you didn't save as much or things didn't work out as well. But yeah, people of all different socioeconomic backgrounds use it. By the way, if people want to learn more about Laura Phillips, you can go to lauraphillips.com. That's lauraphillips.com. And you can learn all about her services she offers. And she's in the Boulder, Colorado area. And she has frequently asked questions, loan calculators, all kinds of cool tools on there. So let's break it down, right? So let's just say someone has a house that's worth $1 million, and they're in Colorado Springs, Colorado, right? And they own it free and clear, and they maybe are a little bit light on cash flow or a little bit light on living expenses, right? A lot of their equity is tied into this house. Would that be a good candidate, Laura? Or what would you want to make sure you ask to make sure if it's a good candidate for the reverse mortgage?
Absolutely, they'd be a good candidate. One of the requirements for a regular HCM, which is called HECM, and it sounds like you're coughing up something just by the way you use it. But anyway, it is considered a home equity mortgage conversion. That's what the initials stand for, is that you need to be at least 62 years old for a standard reverse mortgage. And that is a government product. It's a HUD product. So if you're 62 years and older and you are feeling a little pinch with today's economy, then absolutely you're a great candidate. There are 3 ways that we look at how much equity you can access in your home. One of them is your age, one of them is the property's value, and the third one is the interest rates being used. So, all 3 of those gears have to turn together to be able to calculate that number. It's not like I can open up my HP 12 and put a number in and
get you an average. So let's say someone's 65 right now and the property value is $1 million. They own it free and clear. Are interest rates standard of what a new mortgage might be right now? Are they lower?
Are very
or what?
much interest rates are standard.
Okay.
2 types of loans, a fixed rate and a line of credit. I would say the line of credit is probably 95 plus type of usage in the entire United States. Very popular because it grows while it's not being used. So you have access to that money increasing. It's not like interest, but that value of usage is actually higher each year than it was the year before if you don't use it. I would say that somebody who's 65 years old, off the top of my head, would get 45% of their equity, plus or minus.
Okay, got it. All right. So let's say it's $1 million, and then they could access about $450,000 of that million if they're 65, and let's say the interest rates are around, let's call it 6.5, 7. Is that kind of where we're at right now?
On a fixed rate, probably 6.5-ish, yes, in the mid sixes. Now, on a adjustable rate, we are using we're using an ARM, and those interest rates are variable depending on, again, the loan amounts and the ages. But I would say that the margins are probably running at, 3% or less.
Okay, so all in, is it 3% on top of like the LIBOR, or what's the total interest charge on the variable?
I wish we would use the LIBOR, but we're using the CMT. LIBOR went away, and so the CMT is the constant maturity treasury. It's tracked just like it would be on the LIBOR. You can go out and see that every week if you were very nervous about what that market was doing. Currently is trending a little bit upward, but we had a huge downward trend, obviously because of COVID in those years. So we've trended upward a little bit, as all rates have. Okay,
so like for example, the CMT looks like this week was 3.66, and so are you saying you'd add three to that? Is that what you were saying before when you said 3?
I'm saying that that's probably a good number to be used. That is going to go between office to office, loan officer to loan officer, company to company. But I think that a good margin probably is in the 3s. Could be
okay, so 3
less.
plus 3. I'm just going to be really clear. So is the total interest charge 6.5 to 7 still with the variable, or is the total interest on the variable? Okay, all right. So whether it's fixed or variable, you're looking at about 6.5 to 7%. And got it. All right, and then they take that 450 out, and they can use it for whatever they want. Yeah.
Absolutely, it is your money. You can use it for whatever you want to do.
Okay.
The first year, you're going to get about 60% of that $450,000 that number you calculated.
Okay.
Then the second year, you would get the balance back to you totally.
Okay.
The government decided, somewhere along the line, government being HUD, decided that people weren't necessarily using their money really well if they got $450,000 tomorrow. And they wanted to make sure that it was, I guess it was a fail-safe to make sure that the client, the senior, didn't fail. So.
Okay. Fascinating.
So thank you, Uncle Sam. Right?
How the big government is, and they say you own your house, right? But really, the government in this scenario says, no, actually, we own it at least for the first 2 years for this piece of it, because we're not going to let you take what year it is. That's fascinating. That's a whole other discussion. But.
Right.
Be that as it may, so the first year you can get 60% of the 450, second year you can get 40%. Got it. Okay, so living expenses, invest it, whatever you like. So as opposed to just doing a HELOC, right? So a home equity line of credit, what if I go, Laura, why not just do a HELOC? It seems simpler, or why wouldn't I just do a HELOC?
It does seem simpler in some ways. A HELOC actually requires that you qualify for the loan because it is a loan. They're going to ask for you to make a mortgage payment coming through that loan. It usually has a 10-year draw, typically, and then after that draw, it goes into a 20-year repayment policy. One of the things about HELOCs are that they can be turned off overnight. We did see that in this business back in 2009, 10, those years. The difference is a reverse mortgage does not require a payment. You do not have to make a payment if you don't want to. So it's also an asset-based loan, so we're not really looking at your income. We're not checking to make sure that you can have enough money to make that payment. The only thing a reverse mortgage really wants to qualify and make sure you can do is paying your taxes and your insurance. You have enough money left over at the end of the month to cover those bills. So for most people, they can qualify without having to worry about it. There's no payment required. You don't have to make it if you don't want to.
Got it. Okay, we speak of Laura Phillips, everybody. LauraPhillips.com for reverse mortgages. So no payment for the reverse mortgage. You just pay your taxes and insurance. That makes sense. It doesn't get turned off like potentially like a HELOC. Those are the main things. Got it. So anything else to add for those who might be considering a reverse mortgage you want to make sure that they're aware of?
Well, you have to take a class. I'm trying to think. You have good questions. So you are required to take a class, and the class is through a HUD-certified counselor. If you work with me, I want to make sure that you're well prepared for those questions. You'll get a book. It talks about how these are the typical questions they might ask. How do you respond to them? The class is basically to make sure that you understand that the reasons how you can lose the house, which is not living in it, not paying your property taxes. They also want to make sure that if it is an ARM, that you've really made sure that you have a budget to be able to cover those expenses, those monthly expenses that you have.
Okay, got it. So you're 62 plus years old. You need to make sure that you're going to be living in it, basically for the foreseeable future, and you're not moving anywhere. And you want to make sure you can pay your property taxes and you can pay the insurance. You're not going to just go spend the money and run out of money to be able to pay those two things. Is that a fair summary so far?
I'm sorry. Yes.
Is that a fair summary?
Yeah. It's a very fair summary. Yeah. They're
Okay,
not
perfect.
a hard loan. A lot of people are really terrified of them, particularly lenders. So, hey, all you lenders out there, let me do them. Don't be afraid of them. They are about as fast as a typical loan to get processed. You take the loan application, you send it to an underwriter. They make sure that you've got enough funds to cover the bills that need to be paid, and then you get an appraisal on the home. And after that, you usually get it clear to close and go to closing.
Cool. You take the class, get the certificate, and you got your 40% of your 400 or your 60% of your 45% in the first year, and then the remaining 40% of that 45% in the second year, and away you go. Okay. Anything else about reverse mortgages that you want to share? You maybe want to give a story or something that brought it to life that helped change someone's life? Yeah.
Let's do one thing. There's another product out there besides just a regular FHA HUD reverse mortgage, and it's
Okay.
a portfolio loan. It's a jumbo type loan.
Okay.
Those rules follow the same guidelines. They are kept in a portfolio with that bank or lender. Their rules are a little bit different. You get all of your money at one time. Those loan amounts go
Okay.
up to $4 million.
Okay.
So for those people who have homes that are $1 million plus, it's a great product to consider. The interest rate's a little bit higher, but you don't pay a mortgage insurance on it. So there's some pluses and minuses. If you're in that price range of having a home over $1 million, I always show both processes. Just let you make that decision on which is the best way to go for you.
Okay, so I got a $3 million house. I own it free and clear. I can do a portfolio reverse mortgage loan and get all my $3 million.
Not all of your $3 million.
Oh.
It's still going to be best on a percentage, but yes, it's probably around 50% at that point, more or less, plus or minus.
Okay, so I get 1.5 million of the 3 million.
Yeah,
Okay, and the interest rate's at,
that's the bad one. The interest rate is a little bit higher, and the trade-off is you're not paying mortgage insurance on it. So the interest rates are running about 9%.
okay, so about 9% interest. Okay, got it.
Yeah.
Excellent. Okay, great. You ready for the lightning round?
Oh, I guess. I thought we were in one.
Yeah. So maybe the number one family, like the story that just really brought this to life for you, that helped them to get the financial security and the margin that they were looking for, and kind of changed their life. Can you maybe just give the number one story for that?
There's so many of them out there. I'll pick the very first one that I ever did, which made me really find a passion for reverse mortgages. Is that fair? Because there's so many great stories out there.
Yeah, sure.
It was at least been 10 years now, if not longer. A gentleman called me from Colorado Springs, and he wanted to do a reverse mortgage. His wife had been diagnosed with a life-ending disease. But she was still very healthy, and he wanted to give her the trip of a lifetime. He felt like they had plenty of money to live on after she passed. He wasn't worried about those scenarios. So they took a reverse mortgage out, and he took a life trip around the world for his wife. And it still gives me goosebumps. I mean, he practically cried when we finished. He was so happy to be able to offer her this gift. And that's what made me realize that we have equity in our homes, and we let it sit. And, sometimes it can just be used for a really fabulous thing. And that was one of many, many that I've talked to over the years, of that equity being used to make a life-changing event for themselves.
Fantastic. And then, for the married couple or whoever it is, they pass away, the house is sold and the mortgage is paid off like it normally would be had you had a regular,
In that particular case, because we put both the husband and wife on the loan now, that was not in the early days how that happened, but now it does. Absolutely. Then he actually got to stay, and he stayed in it as long as it met his needs at that point. He sold it. Any money that was left over, he took and went down the road and did whatever he wanted to do. If the house was upside down in those years where we had really bad property values, then he would have just given it back to the bank with no fault to him or his heirs for recouping the difference.
Got it. Yep, makes sense. All right, great. I love that story. That's fantastic. He got to really love and treat his wife to an amazing trip around. That's really great, around the world. Excellent. So next question, maybe a top book that you recommended or gifted the most in the past year.
Top book I have read. Oh, I'm going to have to admit I hadn't read a lot of books this year. And if I do, I like to read historical novels.
Sure.
So,
That's great.
what would be my favorite one? We went to Maui, and I read a historical book about the nurses and the people that lived there during the war, and what their lives were like. And the name of the title just is not on the top of my head, but I really enjoyed it because I was there on the beaches, what they were talking about. So it was really kind of fun to go, I'm here. I'm here experiencing, not the war, but I'm experiencing the experiences they had. Yeah.
That's really neat. Very cool. Very cool. Question number 2. What's something you're most curious about these days? Anything that kind of comes to mind?
Oh, there's so many things to be curious about. Life is moving so fast, and so many things that are going on. I think I watched a show last night, and they were showing what the new AI can do with the computers, and how they started with Spot the dog, right? And that was, I thought, okay, I remember Spot, and I'm watching what they're doing now, and it's mind blowing to think about where we are headed. I'm not afraid of it. I don't feel like Arnold Schwarzenegger is going to pop out, and take over the world so far, at least. But I am really, really impressed with where we are going with technology, and I think it's going to be a great tool for us as humanity if used properly.
Excellent. We're out of time, and we'll just end with this last question. Like, after all your help, all the people you've helped with the reverse mortgages and everything you've done to serve the folks that you're serving, what's the best way that you keep a mindset of stewardship over ownership and also stay centered in your values?
I feel like that money is yours. It was really hard earned, whether it was saved or put into the house in any way or form. It's not my money. It's yours. And I really want to honor that it is what you're going to use to be able to fund the next 30 years of your life, particularly if you're retired. How are you going to fund this? And I find that really, I need to be very careful of your funds. I need to be your steward, to make sure that you're well educated to answer all of your questions. And that really keeps me in my honored place.
Awesome. Well, Laura Phillips, it's more than a pleasure to have you on the show. Thank you for sharing your passion and your unique expertise with reverse mortgages, and helping those that are out there that are looking to get some more financial security, some more cash flow, some more capital, right? To be able to have some more freedom. For our listeners who want to get in touch with you, one last time, what's the best place for them to find you?
Well, there are two ways. Of course, you can go out to my website, which is my name, lauraphillips.com. And Phillips has Phillips, spelled many different ways. It's the best way to reach out and reach me. My telephone number, my contact information is all there.
Awesome. Thank you, Laura Phillips. And thank you, everyone, for listening to another episode of the Build to Billions podcast, also streamed on Capital Gains Tax Solutions podcast and YouTube channels. Hey, we're on this journey with you to scale from millions to billions to give more, all the way to help MVPs, the most vulnerable people. And one way to be able to help those that are, little cash with having a lot of cash flow is having reverse mortgages. So take a look at it. Take a look at lauraphillips.com and go to capitalgainstaxsolutions.com as well. If you're looking to exit a large business or property and have large capital gains taxes, I want to make sure you can defer those taxes. Go to capitalgainstaxsolutions.com. I'm Brett Swarts. She's Laura Phillips. We appreciate you listening today. Thanks so much. Have a great day. Bye.
You have just listened to another information-packed episode of Capital Gains Tax Solutions with Brett Swarts. We hope you enjoyed today's show and found it helpful. Visit capitalgainstaxsolutions.com to access the show notes and to access more resources. Don't forget to leave a review and join us again next time.